Generally in Forex, everybody can analyze charts, everybody can open the MT4 and place trade, everybody can tell you the market is going up or down. But what is important, what is the most important thing in Forex trading is trade management, trade execution. Trade to execute a trade, either to buy and sell, can be done by any other person. But what is the most important thing is what we call trade management. So how do you manage the trade from the start to the beginning? How do you manage the trade to be able to come out with a profit? So that is what we want to cover on today's video, which is risk management 101, the basics of risk management and what you're supposed to do as a Forex trader when it comes to managing your trade or managing risks on your trading. All right, so on today's videos we're going to be covering we're just going to do like a quick recap about a lot size, how to calculate the lot size, what is a Forex leverage, and the right lot size to use in your trading. So depending on the account size you are having, whether you're having a $1,000 account, $10,000 account, $20,000 account, what is the recommended lot size you should be able to use for your trading? So that is what we'll also be covering on today's videos. All right, so now what is a lot size? A lot size in Forex just stands for the aggregate in which you are able to buy a particular currency pair. Because remember, on our previous video we did mention a situation where if you go to a supermarket and you want to buy X, you can't just buy one egg, you buy the X in terms of a lot. All right, we can call it lot because you buy the X in terms of 30. You buy a tray of X, and in that tray of X you have 30X. So in that situation we can call one lot is equal to 30X. That is just an example. You can't just go to a supermarket and you buy one egg. You buy the eggs in terms of trays or in terms of lot. It's the same thing in Forex. In Forex trading, for example, let me just take this. We have this is, I think this is almost $10,000, and you can't just open your MT4 and you buy just $1. Although this is $100, but you can't just open your MT4 and you buy just $1. You buy Forex, you trade Forex in terms of lot. You buy, either you're buying and selling, but you trade Forex in terms of lot, and that lot is measured in terms of unit. All right, that lot is measured in terms of unit. For example, in Forex, instead of talking, remember I used the egg example, right? I used the egg example where one lot of X, one lot here was equal to 30X. All right, but now in Forex, a standard lot size, what we call a standard lot size, which is you can just put on your MT4, what you put is just 1. If you put 1, it stands for standard lot size. A standard lot size is equal to 100,000 unit of the base currency. For example, if we have something like Great Britain pound USD, and somebody say, okay, today I'm trading the standard lot. It means that person is buying 100. If that person is trading a standard lot and put 1, it means that person wants to buy 100,000 unit of the base currency, 100,000 unit of Great Britain pound. And if it's something like United States Japanese yen, USD Japanese yen, and the person said today I'm trading the standard lot, it means the person wants to buy 100,000 units of USD. So when you are talking in terms of lot, you are buying 100 units of the base currency in that currency pair. All right. Okay. And now, if you don't have up to 100,000, if you don't have up to $100,000, for example, remember you are buying 100,000 units of that base currency. But if you don't have up to $100,000 in your account, what you can do is you can buy $10,000. Okay, you can buy 10,000 units of the base currency, which is what we call the mini lot. And on your MT4 or MT5, what you put will just be 0.1. But if you don't also have up to $10,000 and you can afford, the only thing you can afford is $1,000, like most people, what you do is you trade with a micro lot. That means very small. You trade with a micro lot, which on your MT4 or MT5, what you put will be 0.01. You even have what we also call nano lot. And on nano lot, you have 0.01. All right, nano lot, you have 0.01 because that is like the smallest. It's called nano lot, and nano lot is 100 unit. 100 units. So I just add that one is the one I didn't add is called nano lot, and it stands for 100 units of the base currency. All right. So that is how you are able to define a lot size when it comes to Forex. Because in Forex trading, remember, this is a $6 trillion industry, $6 trillion transactions per day, and you can't just open your MT4 and you just buy just one unit, or you just buy just one lot. If you are buying they just say you are going to United States, and you want to buy currencies online. There's no way you just go to a broker and you buy just $1. No, the least you can buy is 100 units or $100. After the least also you can. So that is how it goes up. It starts from nano lot sizes. You go up to what we call micro lot size. You go up to what we call mini lot size. After mini lot size, you go up to what we call standard lot size. But in Forex, what makes Forex so sweet is that even if you don't have $100,000, on your account size to be able to buy 100,000 units of that base currency, you can still be able to buy 100,000 of that base currency because of what we call leverage. All right. So because of leverage, your broker will be able to borrow you money. If you have a leverage of maybe 1:500 and you have a $1,000 on your account, you multiply that 100,000 times 500. You'll be trading like somebody who is having $500,000 in his or her account. So with that, you can be able to buy even 5 times. You can be able to buy even 5 lot sizes, because remember, you have $500,000 in your account. So we'll talk more about leverage when we go to the subsequent slides. All right. So that's that about that. So leverage, I've already explained leverage. So with the power of leverage, if your broker is offering you a leverage of say 1:500, it means if you have a $1,000 in your account, they'll multiply that $1,000 times 5. So you'll be trading like somebody who is having a $500,000 in his or her account. So with that $500,000, you can open bigger position. You can even use 5 standard lot, since one lot size is equal to 100,000 unit of the base currency. All right. It's 100,000 unit of the base currency. But now you have 500,000 you are trading with. Because of leverage, your broker has been able to multiply your money time by 500. If your broker is offering a leverage of 1:500, because that's how they measure the leverage. You have 1:100, 1:200, 1:500, 1:1000, and so on. So let's just assume your broker offers you a leverage of 1:500. That is what you have on your account balance, and that is the power. So in Forex, you see with leverage, it's like a scissor. It's like a scissor when you sit on a scissor and it weighs up and down. With a small account balance, in Forex, because of leverage, you can actually be able to control a bigger lot size. You can be able to control bigger amounts when it comes to Forex trading because of leverage. So you are leveraging your broker's money. You are leveraging the loan from your broker. So that is what we call leverage. All right. So after that, this is the most important part. The most important thing I wanted to point out today, because you can even take a screenshot of this just to put it down, just to put it somewhere. All right. You can take a screenshot of this so that it can guide you anytime you are trading. Anytime you open your MT5 or anytime you open your MT4 and you want to place your trade, as a beginner, try to start as much as possible with the best possible risk management practices. All right. With the best possible risk management and money management practices. And coming here, you should be able to ask yourself, based on any account size you are having, what lot size can you be able to use in your account that will enable you to be able to risk just a percentage of your account, or that will have the optimal risk management. That is what we want to cover in this particular point. Because when you are starting, try as much as possible to use optimal risk management. When you've then gained experience, that is when you can start using bigger lot sizes, like maybe during news events, like maybe other trading news strategies and all of that. But when you are starting, have a percentage of your account that you risk. For me, when I was just starting, the highest I could risk per trade was 2% of my account. All right, 2% of my account. That is the best risk management you can take on each trade. But now, the more you gain experience, and the more you start getting expertise about trading, and the more your risk appetite also increases, you can increase your lot size. There used to be times where I used to risk 100% of my account size on one trade. When I know that, okay, if I win this trade, I can make 300%, I can make 400%, or I can make 200%. So now, at that particular point in time, I can afford to lose. I can afford to lose that amount. So I don't care. I consider like, okay, I'm playing about with that particular amount. So I can play now with bigger lot sizes. I can play with bigger risk management. I can afford to lose that much. So when you are just starting, this is the standard you use. Let's just assume you have, because you can see here, I have lot size. All right. Here I have lot size. I have account balance. The first one here is account balance. All right. Then lot size, the name, and the pip gain. So if you're having something like a $10 account, there are some brokers that will allow you to even deposit $10 in your trading account. So if you're having something like a $10 account, what you do is you use the nano. All right. You use the nano lot size. That's the highest you can go. So if you are having a $10 account in your account, but no matter the leverage your broker is giving you, the highest you should use should be the nano lot size. So on your MT4 or MT5, what you put will be 0.001. All right, it will be 0.001. Unless your broker is not offering, because some brokers don't even go as low. Some brokers don't even give you the option to use the nano lot size. That is when you can use 0.01 on a $10 account. But even still, 0.01 on a $10 account is you're over leveraging your account, and you are over risking in a $10 account. Let's just assume now you have a $100 account. The lot size you can use is 0.01. That's the micro lot. It makes sense. All right, it makes sense at that particular point in time. All right. Let's go now to the pip gain. If you are using if you are using a micro lot and you make one pip gain, you make 1 cent. You make 1 cent of profit. All right. Things start getting interesting when you start going down. If you have a $1,000 account, what you can use is 0.1. Good. You use a mini lot. Mini lot. That's when you start talking of reasonable money. All right. Any other thing is just for practice sake. But now, when you start talking of mini lot, if you make 1 pip, obviously you make $1. And within a day, there can be situations where within a day you make 100 pips. You can make 100 pips in some days. So that 100 pips here, you'll be making $100 in that day. All right, you'll be making $100. So this is where things start getting interesting. And if you have a $10,000 account, what you use is a standard lot. So that is where you can have the ability to use your standard lot. Remember, this is including leverage and everything. I'm talking $10,000 account like the one you have deposited, like this amount, like this. This is $10,000 directly from the bank. So if I was to trade with this $10,000, the standard, the lot size I'll be able to use would be 1, which is the standard lot. And if I make 1 pip profit, my 1 pip profit will be $10. So if in a day I make 100 pips in a day, which is possible. Some days I used to make 500 pips, like when I'm trading gold. If in a day I make 100 pips profit, it means I'll be multiplying this by 100. I mean, within that day, I made $1,000 profit. You see, so within that day alone, I made $1,000 profit. And if you have $100,000 in your account, like most banks or most big people, what you can do is you can use double standard lot, what we call double standard lot, which is just 10. 10 stands for double standard lot, which 1 pip you gain is equal to $100. All right. And if you have 1 million, if you have $1 million account, like some people who trade for prop firms or they trade for banks or stocks, if you have a $1 million account, what you use here is what they call triple standard lot. Triple standard lot, what you write here is just 100. 100 stands for triple standard lot. And each pip you make, just 1 pip you make, as the market goes up or down, you either gain or lose $1,000. So if in a day you make 100 pips, it means you multiply 1,000 times 100. You'll be making $100,000 in that day as your profit, which is possible. You have a $100,000 account, and within that day, you made $100,000 profit. So this is like the proper risk management. This is the proper risk management when it comes to Forex trading. So depending on your account size, this is where you'll be able to choose the risks you'll be able to use on your trade. If you want to be able to trade with proper risk management, in place, this is what you have to be able to do. All right. So you should just have this as a screenshot. You should have this as a screenshot somewhere, or as a table written somewhere to say, okay, if I have $100, I'll just come and for proper risk management, this is what I'll put. Or if I have $200 for proper risk management, this is what I'll put. All right. So those are the steps you take when you want to be able to have proper risk management when it comes to Forex trading. All right. So with that being said, we've been able to come to the end of this episode. We've been able to come to the end of this short video. So what we've been able to cover is risk management 101. How can you be able to properly manage your risks when it comes to Forex trading? Because the most important thing in Forex is not placing the trade. Anybody can place a winning trade in Forex. But the most important thing is making profit consistently, day in, day out. The most important thing is managing your trade to come out profitable. So because any person can place a winning trade, but now, how can you make those trades consistent? That's what we'll be able to cover on this particular video today. So with that being said, if you've gotten some value from this video so far, please leave a thumb up on the video. Click below and leave a thumb up on the video. And if you are watching and you haven't subscribed, please subscribe to the channel so that you can be able to follow us along the course, and you also not miss a lot of relevant information once we upload them on the channel. And also, we're going to leave a playlist here. This playlist will guide you and also show you other courses if you are not yet watched all the videos on the course, because this is a free course that will take you from nothing to something, from grass to grace when it comes to Forex trading. So with that being said, once you've subscribed, like the video, comment, share, and do other good stuff, stay informed, stay happy, stay profitable, and I'll be able to see you guys on another live video. Peace.